Welcome to AI Forex, where we simplify trading for everyone. Today, we're breaking down the ultimate trading strategy for beginners, step by step. If you're new to the markets and feeling overwhelmed, this guide will give you a clear, actionable strategy that you can implement right away. Let's dive in. Understanding the basics of market structure. Before you can trade effectively, you need to understand how the market moves. Markets don't move randomly. They follow patterns. We have three main phases: uptrend, downtrend, and consolidation. Spotting these patterns early can give you a significant edge. Look for higher highs and higher lows in an uptrend and lower lows and lower highs in a downtrend. Consolidation is when the market is ranging without clear direction. Identifying these structures is the first step in your trading strategy. Choosing the right trading time frame. Not all time frames are suitable for beginners. We recommend starting with the daily and 4-hour charts. Why? They are less volatile and provide clearer signals. If you're working a 9-to-5 job or can't monitor the charts constantly, these time frames are ideal. Use the higher time frame to identify the overall trend and the lower time frame to pinpoint precise entry and exit points. Selecting a trading strategy. Now that you understand market structure and time frames, it's time to choose a strategy. A simple yet effective beginner strategy is the moving average crossover. Here's how it works. Use the 50-day moving average and the 200-day moving average. When the 50 crosses above the 200, that's a bullish signal, a potential buy. When it crosses below, that's a bearish signal, a potential sell. It's simple but powerful when applied with discipline. Risk management, the 1% rule. No strategy is complete without risk management. As a beginner, it's crucial to protect your capital. Follow the 1% rule. Never risk more than 1% of your trading account on a single trade. This will prevent significant losses and keep you in the game longer. Calculate your position size based on your account balance and stop-loss distance. This way, even if the trade goes against you, your losses will be manageable. Building a trading plan. A trading plan is your roadmap. It should include your strategy, risk management rules, and trading hours. Write it down and stick to it. Include entry and exit criteria, the type of assets you will trade, and how you will track your performance. Having a solid plan will keep you focused and reduce impulsive decisions. Next lesson: reviewing and adjusting your strategy. Every week, review your trades. Did you follow your strategy? Did you stick to your risk management rules? Keep a trading journal to track your progress and learn from both your wins and losses. The goal is not just to make money, but to develop as a disciplined trader. Stay consistent and keep learning. Trading is a marathon, not a sprint. Stay committed to your strategy, keep your emotions in check, and continue learning. The more disciplined you are, the more successful you'll become. And remember, every successful trader started as a beginner, just like you. Thanks for watching AI Forex. If you found this video helpful, hit the like button and subscribe for more trading strategies and market insights. Stay sharp, stay disciplined, and keep trading smart. See you in the next video.